Equity Bank Group has announced 19.15 billion shillings pre-tax profit for the full year ending 31st December 2013. This represents 11% growth over the previous year, 2012, when the group posted 17.29 billion shillings pre-tax profit. Equity Bank CEO Dr. James Mwangi said the bank continued to maintain growth despite a challenging environment in 2013.
We believe the bank has now managed to build solid cash generating capability. The bleeding that used to be there with the subsidiary is no more. They have all become profitable. So we have seen now the bank can be able to grow very fast and at the same time maintain a dividend policy that is consistent with the policy of 40%. So 11% growth in profitability.
The performance was boosted by the bank's investment in IT, growth in the number of customers and branch upgrades to cater for small and medium enterprises, SMEs.
We can say now we have completely become an SME bank, with 62% of the volume of the bank being the SME segment. And for that reason, we'll see the bank growing faster than the average banking industry because it's growing on the back of an SME strategy. We're seeing a huge opportunity in modernization of agriculture and particularly reducing reliance on rain-fed agriculture. And we are now seeing our rural banking strategy being rewarded heavily going forward because agriculture is the mainstay in those rural areas. So the prospects for our rural branches have become better.
The customer base grew by 600,000 to 8.4 million, pushing customer deposits up by 16% from 165.8 billion shillings to 194.8 billion shillings. The increase in the number of customers maintains Equity Bank as the leading bank with a huge network of over 10,000 agencies.
This agency model has helped us now move from a brick and mortar fixed cost delivery channel to a variable cost channel. But more importantly, it has really enhanced our theme of accessibility and affordability and convenience, because this is banking where the customer is. The agents now have overtaken branches and ATMs, all of them, and it's the top now delivery channel for the bank. And in terms of transactions, agents last year managed to transact approximately 200 billion Kenya shillings.
The group's total income grew by 14% to 41.86 billion shillings, up from 36.83 billion shillings over a similar period last year.
Behind the numbers, what sells for this bank is affordability, convenience, and accessibility.
The bank's focus on innovation was also directed to other alternative delivery channels, such as mobile banking and payment systems. This was supported by a robust core banking system.
So the upgrade of Finacle enables us now to seamlessly roll out to wherever we want. We also upgraded our switching infrastructure so to enable all the payment gate systems from around the world to connect to us. So we link to all the payment systems now, and those systems are available immediately throughout the whole region.
Going forward, Dr. Mwangi foresees an improved operating environment, citing key economic drivers being oil, mining and gas activities, infrastructure investments, modernization of agriculture and SMEs growth.
The equity story remains the same. It is centered on strategically positioning ourselves in East Africa, becoming the East African powerhouse. We're now deepening there. We are seeing that the operational story is about innovation and technology driving growth. We're seeing a story of strengthening management team with proven track record. We're seeing asset quality and strong funding being focused on, and we're seeing outstanding growth trajectory in profitability being sustained.